What's up, traders? It's your boy Vincent, aka Vin Boss, and with that being said, today we are going to be dealing with all the time frames on all currency pairs that we discuss here that are free on YouTube. And the paid membership, it's free. All you have to do is register your trading account with us on XNS. The link you get on Telegram for you to register with us, and the link to the Telegram will be left under the video description. So with that being said, we are going straight to the euro and the dollar. So with the euro and the dollar, very simply put, what we do have right now is the 4-hour chart, and I would like for you to notice something. Right now, this two horizontal vertical lines, they represent the start of April and the end of April. So April sort of looks like a strong candle to the upside. This is the opening and this is the close. What do I expect? I expect to see this continue to the upside, given the fact that the last time we had this was sort of we had the CPI, which was here. We had the CPI, and we had yesterday we had the PPI, and look at the PPI's reaction. This was not a much of a reaction at all. Now, what does this mean? This means that the monthly liquidity, or following the bullish candle from the last month, still matters. Why? Because this green horizontal line that we have is the wave liquidity, and this yellow horizontal line that we have is the moon phase liquidity. So after that, this is the monthly liquidity. So if it happens today that the retail sales come in hotter than expected, of course this might be the situation. We might be reaching this level right here, which is the wave liquidity at 1.1627, and then look for buying opportunities to go to the upside, because this is still a bullish trend. We are in a bullish trend. We are not looking for any selling opportunities. The only time that we will be looking for selling opportunities is if we invalidate the monthly liquidity and we go to the downside and pull back to retest the monthly liquidity and then go to the top side. Now this is just the 4-hour analysis. Let's go over to the daily time frame and see what the daily time frame has in store for us. And with the daily time frame, of course, this does not look like it is ready to go to the upside to break out this top yet, but we already have the moving averages and they were tested, and as soon as they are tested we get highs. But look at the tails that are happening. This signals that we might continue to retest the wave liquidity right here before continuing to the upside, but everything else depends on the retail sales numbers today and the unemployment numbers that are coming out today on the New York session. So if you're not part of the real account traders community, you won't be seeing what I am seeing currently right now. So, or you won't be seeing what we will be discussing in the real account traders community. It is important for you to get the exact entries, but it is also important for you to like and subscribe to make sure that you do not miss these moves to the upside if it does happen like that. So if the jobs comes lower than expected and the retail sales are falling, this would simply mean that from here we might have a bullish engulfing, and with a bullish engulfing we might continue on Friday again with a strong bias to break out this top. This is the daily time frame, and we, as quietly evident, we have not yet reached this level of resistance. We from this support zone from here to the upside, but we still haven't reached this level of resistance. So from there we are now going to the weekly time frame before we go to the monthly. And on the weekly time frame, what does it look like? It looks, we do already have a candle below the opening of last week. This simply means that the candle might still go below and retest this before continuing to the upside. So this is not yet closed, and we would not really much give it that much of a thought. And on the weekly time frame, it looks like we might be engulfing only if we get to the level here, which is 1.1675. This is the level that we are watching. So with that being said, traders, the last but not least, euro dollar monthly time frame is this one right here, which is the monthly time frame. And as you can see, what I did mention on the 4-hour chart, this is almost, we have a new high from last month. That is why I'm expecting this to just stall here and have another bullish candle that might even reach this high of April, March, of January. So if we do have this high of January, it simply means that the euro would be strong and it would entirely break the market of the dollar. So with that being said, I would like for us to just continue, or to move back to the 4-hour chart to see what we are expecting. And remember, the dollar already is sitting right here at the decision point. What happens next, the move will shape the entire week, either to the upside or a continuation right here before continuing to the upside. We will be here, we will discuss this after the retail sales print out the data. Then we will come out and react to this data. Remember, another thing that you have to remember is that after a high impact news, price doesn't move randomly at all. And with that being said, this simply means that if we do break to the upside, the move will come down for this, for us to give us buying opportunities, and then continuation to the upside. If it goes down like this, you know that this is a trap and it will have to come down, and then continuation to the upside is imminent. Now, this is what we are expecting on the 4-hour chart. Let's go straight to the pound and the dollar to see what it has in store for us. So traders, with the pound and the dollar, the pound already showed weakness. Now we are watching if it continues to trap the sellers. Right now, remember, watch this. I want you to pay close attention to this first. I want you to pay close attention to this. A strong buy to the upside, tails, 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 tails right here. And not only that, this is the monthly candle. Look at how strong it is. And if this is monthly candle is this strong, what we might expect is to bounce and then continue to break out and make the new high of this month. This is what to expect. This is not what is going to exactly happen, because we have the retail sales yesterday. Why do I say this is not going to happen? Or yesterday we did have this was the CPI's reaction, this was the PPI's reaction. The PPI was supposed to go stronger than this to the downside, because it came in hotter than expected. But what did happen was, instead the day was like this and then ended up pushing higher. What this shows that we are having some liquidity around here. So if today the retail sales come in lower than expected and unemployment rate becomes higher, you know, this would be the wave to go with to the upside to break out this high of May. So with that being said, traders, I do expect to see buying opportunities coming in from this to the upside. And with that being said, traders, let's go over to the daily time frame. And on the daily time frame, very simply put, this right here looks like an area to test again, because on the 4-hour charts, remember, we did have tails, and those tails are still evident right here on the daily time frames. if you pay close attention, this tail here and this tail here. So it is more evident that if we come here, we might as well be bullish to the upside to break out this structure and potentially reach the resistance zone. But if the retail sales and the unemployment rate comes in stronger than expected, this is to be expected from here, a retest from here, and still a bullish bias to the upside. Remember, the only time we will be selling is if we break below the monthly liquidity. So this is the overall direction on the pound and the dollar. So remember, deeper pullbacks don't invalidate the setup, they create a better entries, which in terms, this is what I'm talking about by deeper pullbacks. If this happens, it gives you a better chance to take out this, because risk to reward ratio would be favorable here more than here or even here. So the best trades come after liquidity grabs, not before. So that is why right now it would be very important you stay out and watch the retail sales, what is going to happen on the retail sales. Buy from here would be a beautiful setup to the upside. And with that being said, this is what I expect to see on the daily time frame. And since this is the daily time frame, we are going on the weekly time frame. And very simply put, on the weekly time frame, as you can see, we were bullish to the upside because of the same liquidity that failed here. It made a deeper buy from here, and this was a beautiful setup to the upside. So what to expect now? As we can probably see, this looks like a bearish engulfing, but this also can relate to retesting this level here of liquidity. Here we do have liquidity here on the 4-hour charts. If you probably have forgot, view back or wait for this pound to be invalidated so that we can see this. So at the end of the day, this move is expected to go to break this top and potentially reach the resistance zone. We are not looking for selling opportunities. If the market goes down with the retail sales, we might go with the retail sales because we know how, but only those who are in the real account traders community who have joined us know that we know how to take these waves. But if you're not, please be careful with taking this, because you do not get the exact entries from me on the free YouTube channel, but you get the direction just as much as you get them in here. So with that being said, this is the strength of the monthly time frame, the bullish engulfing here. And this is why I do believe that this is just noise, and it might continue to break out this top here on the monthly time frame. This is exactly what to expect. As you can see, we are in a bullish momentum with the monthly time frame. Nothing has suggested that we are going to break below here, or even here. So anything else that comes is the movement to the upside. This is the monthly time frame. So everything else in the monthly time frame, weekly, daily, and 4-hour time frame, if they all align, that means the market is trending. So this is the pound and the dollar. And with that being said, traders, remember these levels are here to be tested, and then a continuation to the upside. This is the moon phase liquidity, and this is the wave liquidity. The wave liquidity is right here at 1.3485. This is exact place to look for buying opportunities to the upside if it does happen. But what we will be watching right now is the the retail sales numbers that come out during the New York session. And with that being said, traders, most important thing to pay attention to that I'm not mentioning right now is the moving averages. These moving averages, they are not 50, they are not 20, they are 200 moving averages, which means they just measure the trend, and they are able to, cut the fake outs. And as soon as this moving average is being invalidated, then you know the direction has changed. It has never been we can even just zoom out. Do you see now? Price is above. This is a 200 moving average. As soon as price is above, buyers are allowed, and it even came down here. stayed above, buyers are allowed, but as soon as it went down, now it was time to sell and it went up again. So this gives you the edge not to blow accounts while trying to catch market shifts, and it just cuts out the noise. It just cuts out those fake breakouts. So traders, don't guess this move, wait for confirmation, because the difference between profit and because that's the difference between getting profit and getting stop out. Right now we are going to US dollar and the Japanese yen to see what it currently has in store for us. So with the US dollar and the Japanese yen, traders, very simply put, we are having mixed signals from the daily to the monthly time frame. But of course, we do follow structure. It is the most important thing that will keep you in this business. So with that being said, traders, this is the high of last month. Let me zoom out a little bit. This is the high of last month, and this is the moon phase liquidity. This is the monthly liquidity, and this is the wave liquidity. So with that being said, traders, what does this mean for the US dollar Japanese yen? Remember, on the 4-hour time frame, we already have this low here, which is, if you pay close attention, which is lower than the opening of March, right? April's low was lower than the opening of March, and it does look a bit stronger to the downside. And mostly, if it does this looks like a flash crash. So if this looks exactly like a flash crash to the downside, very simply put, what we would like to see is a retest of this to the downside. We did have this, another retest might be coming to the downside, or if the retail sales come hotter than expected, because already the CPI, the PPI they already have came in with the hottest price in the market. So if this happens, that we do have a stronger retail sales, this would mean strength for the dollar, and this would keep on continuing to the upside to even break this high of April. So traders, with that being said, this is the 4-hour outlook on the US dollar and the Japanese yen. Very simply put, let's go to the daily time frame. And on the daily time frame, you can see that this was a strong momentum to the upside, but it didn't hold, broke back down. And if the dollar comes and prints a retail sales and unemployment rate increases, then this would be a great place to sell another pair of the US dollar, and this might be the target place. This is the support zone of the US dollar Japanese yen currency pair. So with that being said, if and only if the retail sales come in stronger than expected, this is to be expected to break out this high here. This one will be expected, of course. So after this will be certain of which direction the market is going to go. Now, repeated spikes against buyers usually means accumulation, not a reversal. What do I mean? Buyers trying to come in, these are spikes that keep them out. So this potentially might go to the upside and invalidate this. Now, if support hold multiple assets, the next move usually is expansion, which this would be the support that we discussed on the pound and the dollar, that we discussed on the euro and the dollar, and right now we've just broken beneath and under this beautiful setup here on the US dollar and the Japanese yen to the downside. So most importantly is all gonna come down to one thing, which is the retail sales numbers with the New York session. Unfortunately, I will not be dealing with it live here on YouTube, but Real Account Traders membership, they already know that we will be dealing with it live with the Real Account Traders community. So last but not let's go to the weekly time frame. And on the weekly time frame, simple textbook, the resistance here looks like a fall and another fall. So if this happens, that we do have, it will break out. This it is evident, but expectations is to break to the downside to take out this low right here. But for this to happen, you need to see the dollar missing on retail sales. You need to see unemployment increasing a little bit, so this would trigger a continuation to the downside for the US dollar, and this would be a perfect opportunity. Last but not least, this is the monthly time frame, and on the monthly time frame we do have a month like this month, the previous month of March, this is April, and on April, traders, we are seeing that we do have a low that is lower than what March has anticipated for us. So this is why we want to see this happening and reaching this level of support again before we can even think about going to the upside. But if we are going to invalidate this, let's zoom in a little bit. But if we are going to invalidate this, if we are going to invalidate this and break this, then that means that the US dollar and the Japanese yen would potentially mean that the retail sales print hotter than expected retail sales, and this would be a fantastic setup going to the upside on today's market. So with that being said, traders, this is a great opportunity for traders to take. Now remember, on the 4-hour chart we are looking a bit like this, and with that being said, but it might potentially come in as this or as this spike. These two spikes, we might potentially get a stronger spike only if we have the retail sales miss the expected consensus, and then if only the dollar prints a stronger move to the upside, then we're just gonna continue like this to the upside to even break the monthly break of structure. So with that being said, traders, this is the US dollar and the Japanese yen. Let's go back to the last but not least, gold analysis. And traders, with gold, very simply put, we do have a mixed month and some key details that you need to pay attention to. Now, it is evident that on March, gold did this drop to the downside. Let me just remove this. Gold did this big drop to the downside, and after this big drop, it just came up, and it pretty much didn't do anything in April if you pay close attention to it. So how it is important to see how March started. March started, oh, this is my internet, of course. Now March started with a bullish impulse to the upside, right? March started with a bullish impulse to the upside, breaking this top, and this looks like it is now retesting this top to continue to the upside, right? This is what it looks like. The true fact is that it is still bearish. The previous in March it was too bearish. So if the dollar prints weaker retail sales, we are going to have a beautiful buy to the upside. But if it does print stronger than expected, we are going potentially to break this low here, or to even reach this level again of support before going to the upside. Now this is just gold on the 4-hour time frame. Now with that being said, traders, let's go to the daily time frame. On the daily time frame, very simply put, what we see on the 4-hour time frame with gold pushing to the upside is evident here. And if anything happens against the dollar today with the retail sales and the unemployment rate, we might break this top and potentially reach the all-time high of gold again. So if the dollar fights back, has better retail sales, unemployment decreases, then of course we are going to be hitting this low here, or even breaking this low first, but the primary target will be this low before even reaching support, because after this support, continuation to the upside will be mostly imminent. So with that being said, traders, this is just the potentiality of what could happen today with the retail sales. And on the weekly time frame, as you can see, we do have a bullish engulfing with two tails, which indicates that the dollar might fumble this one and we take out the all-time high. This is the potentiality, and this is of course the support. And after the support, that week we had a flash crash, and then everything else started to make this movement to the upside. Potentially it is not yet formed, but everything else is going to rely on today's retail sales and unemployment rate. So traders, with that being said, this is the weekly time frame. We are now going to the monthly time frame. On the monthly time frame, there's nothing here to discuss much, because what I believe is that what I do believe here is the fact that if we miss the retail sales, we are going to support again and have this to the downside, because this is not entirely a bullish, it is a 50% push, but we still have a 50% push to the downside. So it is 50-50. That's why the next month that followed, it was an indecision, even though it looks like it goes to the downside, but it was an indecision. That's why if we do get a bullish catalyst on the dollar, we might see this reach and break this low. But if we do get a bearish catalyst on the dollar, this also can potentially block out this monthly high or this all-time high on gold. So traders, one thing that you have to remember is, when gold is mixed, don't predict, follow the dollar, right? It is important. It is mixed right now from last month. You don't have to predict gold, you just have to follow what the dollar is saying. The cleanest gold trade come after structure break, not inside consolidation. Let me just show you what I'm saying. The cleanest gold trade comes after structure break, not inside this. If the structure breaks, comes down, and then this would be your greatest opportunity, not inside this mess. If you are inside this mess, then you are definitely in trouble. Trying to predict from this can wipe your account out, can get you to drawdowns. You don't want to be part of that. So wait for confirmation on gold, because one clean move pays more than 5 forced trade. Now, anything else that you have to, or that you want to talk about, please make sure that you come to me with you click the link on Telegram, you come to me and question. I will walk you through it. Right now the market is about not guessing the direction, it is about waiting for confirmation. CPI and PPI created the setup, retail sales will trigger the move. Now with that being said, traders, thanks for watching this video. Make sure you like, you subscribe, and if you think this video has helped you gain a deeper understanding, please make sure you join the Telegram group and find more setups, more videos about trading signals. With that being said, beautiful traders, thanks, bye bye again.